Hi, everybody, and welcome back to Fang Friday. This is Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol and Associates Asset Management. First off, in case you missed it, I was on BNN Bloomberg this past Tuesday morning talking about the Canadian banks, most of which reported this week. If you missed it, you can click the link in the description. Now, on to the fangs. There has not been a lot to do lately, but now there suddenly is, and it is not all NVIDIA. This week must be some sort of record. We are now waiting for no less than 5 Godot's, as in waiting for Godot, to make up their minds as to what they're going to do next. Only Amazon, Netflix, and Apple seem to be in some kind of distinguishable path. Mind you, I suppose that in this regard, the fangs are very much like the overall stock market itself, and indeed the entire economy. Is recession coming? And will that be a soft or hard landing, or none at all? Bear or bull market from these lofty levels? Are rates heading down, or as some suspect, up again? Stocks or bonds? Questions, 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 and the answers yet to come. I observed the last couple of weeks that the FANG stocks had settled into 4 distinct modalities, 2 stocks in each. But that has changed this week with a full 5 of the FANGs now circling key breakpoint values. So a lot of decisions will need to be made, and I want to alert you as to what those decisions are as we wait for some market guidance. Anyway, without further ado, let's take a close look at those fangs and what went on in the past week. But, as always, before I do like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. Okay, let's start off with the 3 where I'm pretty sure we know where the path is. And the first one is Amazon, which is now about partway between its bubble price and its HB1, about 9.5 times book. It is very definitely, or has been, a hold buy. If you were to ask me, by the way, right now, today, Ross, what would you do with Amazon? Hold it, buy it, or sell it? I'd have to say, sure. In other words, between breakpoints, okay, you cannot say anything about the immediate future direction of stock prices. Between breakpoints, stock prices are a random walk, and we should not forget that. The same holds true with Netflix. It looks very much to me as if this stock is heading nicely for its HB2, and we would definitely want to be holding this stock. Now, the one stock that has been in a very clear downtrend has been Apple. And as indeed you can see, after it broke its HB6 price, you can see very clearly, week in, week out, for the past 1, 2, 3, 4 weeks, the stock has been oozing generally lower. Never falling, never more than $1, $1.50 a day, but steadily declining, pretty much in line, of course, with its fundamentals. Alphabet, rather surprisingly, I think, for an AI stock, has set back quite abruptly to its mid-super growth price. That's 5.5 times book value. Now, as you can see, for the past year, the mid-super growth price has roughly been a good low for the stock, and I would be at this juncture buying the stock. The if you buy a stock here when you've got a compound growth rate, as we do with Alphabet of 12.5%, just standing still means things are getting better. Microsoft has run hard up against its HB2 price, that's 12 times book value, and so far has just not been able to break out. I would not add to it. I would not buy the stock. I would not add to it unless it can. Now you can see there's a little bit of a hope here, a little bit of an uptick with the fair market value, but so far the HB2 has been solid resistance, and I wouldn't do anything with the stock right now. NVIDIA has run hard up against its HB7, that's 43 times book value. And that, by the way, is its very, very long-term high, going all the way back to 2000. Hasn't been able to break out so far. And of course, this is everybody's AI favorite. So we're not going to dismiss the possibility that it will, but so far it has been unable to do so. And I wouldn't take any action with this stock right now. Tesla has been just sort of floating right along its HB1. That's 9.5 times book value, as the market tries to decide what it's dealing with. Is this an AI stock, or is this an EV stock? Well, right now the market is in an indecisive mode. Frankly, given that I tend to treat it as an EV stock, I wouldn't touch it. But that would be a decision that you would have to make. Finally, Meta. Meta, having leapt to its bubble price, and that, of course, was its very, very, very long-term high, had been sort of struggling against the bubble price. But it looks now as if it is clearly breaking out, and I would now raise the stock immediately to a buy. The next quarterly earnings, of course, won't be for a couple of months now, but if they match the big surprise that the stock had in the last quarter, I think we can see this stock moving potentially a lot higher. So to briefly recap, as of today, there are only 3 fangs with what looks to be a clear market direction. 2 heading up, Amazon and Netflix, and 1 heading lower, Apple. Of the remaining 5 which now need your full attention, Alphabet has fallen to critical support at its MSG price, 5.5 times book, and needs to hold. It's poor action for an AI stock, to be sure, but it should be good support. Microsoft is doing a bit better and remains within a stone's throw of its HB2 price, 12 times book, which would be a breakout, but thus far remains south of a breakout. I would take no action here. NVIDIA, for all its vaunted sales and earnings prowess, has not been able to break out over its HB7 price. That's 43 times book, which is at its all-time valuation high reached but not exceeded last year. With a price-to-sales ratio of 32.5, one might wonder, how high is up exactly? But for now, all we can do is watch in awe as the stock scales its own Mount Everest. Tesla is sitting on its HB1 price, 9.5 times book, while the market tries to decide if this is an AI company or a car manufacturer. And this leaves us now with Meta, sitting at its bubble price, 7.4 times book, the most promising of the fangs, and now looking very much as if it is breaking out, I am pleased to say. I will certainly raise the stock to a buy right now, as I strongly suspect that the next quarter's numbers will match the last quarter's blowout numbers, and we could see further fireworks ahead. In total, summarizing where I would see each of the fangs at present, I would want to be holding Amazon and Netflix, and buying or adding to Meta on its breakout over its bubble price, and adding to or buying Alphabet on its retracement to its MSG price. Nvidia and Microsoft need to break out here before I would want to add to any holdings that I have. Finally, I would continue to avoid Apple and Tesla, as I have for some time now. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I will see you